For eMiniWizard.com and MarketWizard.com, reminding traders to use risk capital you can afford to lose. All right, the suggestion we had made was try to buy that 34s to 32s as a support idea to try to get to the gap. We've closed the half gap at 40.75. We've closed the 42, which would be the late close. And we're bumping into the top, obviously, of the range. So again, risk and reward starts to come into the picture. 10-minute chart, Globex has been very helpful, pushing us up. And once you get a 10-minute chart that's working, if you want to switch back to this is your deeper chart that's working, that's helping, then you can also go back to your 5s. You can see how sloppy this looks, but how clear it was on that 10. That's part of the art of trying to do this. I've got 44 as the close for the late close. So stops up. Anybody that's playing for the 44s? Overnight high, we're testing. And a reminder, bots are pretty accurate. And at this 42 to 43 should definitely be paid and on a trailer. And we're going to use that 38 as a key support idea, as we said we would today. This is a great trade. So early morning low, that 28 support has helped. And the aggressive trade we called in here, 34s to 32s for the gap trade, has 3 ticks remaining. Nice trade. Keep an eye on time. Been at this about 45 minutes. Sometimes you get within a point, risk and reward will come in. That's what makes trading hard. You don't want to give back 5 points to make 3 ticks more. And we bumped into the blue line. And great trade. Anybody who took today's long side trades with the trend, with no expectation about taking out yesterday's high or anything like that, just simply an odds idea to go with the flow and try to get to the gap and half gap. Pretty steep trend line, but it has been following that so far. It's too steep to remain that way all day long, my belief. But it's worked for the higher highs, higher lows, whack-a-mole trade. One of the things that I was looking at earlier today was this 29 and a half, 28 area, and that 34, which is the flipper area. Kind of relied on this idea that if, in fact, we're going to get up to close that gap or near it, first things first, you've got to take out, get above this 34 and stay there. And that 39, remember pre-market, we talked about that 39 area. And then now, 44 and a quarter, 44s. So this is today's model. And so far, that's been a big help to buy the bottom of the pipe and come back. And sometimes, not always, but sometimes these highs, you know, you take a look and say, okay, that was a spike above it. You still got to get above this, or else it's a small pattern in a head and shoulders. Very helpful chart this morning. And the pipe has definitely worked. Get above the 44s. Guess what? And that's your next range. But let's go one step at a time. And we looked before at some bigger charts. Here's another one. Going forward is a 2-year chart. Note how the middle is held at 603. We've obviously taken out the 2685, so keep an eye on that going forward. 72 is up here as next resistance, basis this frame. And in this pattern, whack-a-mole with double down here right now. And here's our corrective move chart. This has been our support box. These 89s, 90 area to 2732. And now the market trying to get into this next box, and that's why I think it was Steve. We were talking last night. He posted something in the room, and I had suggested that this would be my next resistance idea. There are a couple above us. First and foremost, you got to get above this this high, which is around 56, 57 area. Then step by step, you got to get above that 64 to 65 area, and then the 75. And obviously on the south side, until 22 breaks, nothing goes. That's supportive, that 22 that we talked about. So that's the way I'm looking at this for bigger perspective, and looking at it objectively, not with emotion and wishing and hoping and praying, just step by step. And if we stall and come backwards, then I'm going to be looking for ideas in this box, because not a lot of support has been built up. And this may take until next week, obviously. Who knows what happens with G20? Nobody. But for now, this is a double top, and so that's the key. Thank you, Zeke. Here's a chart on Apple. And I think it's very telling in terms of our range, and using this idea of boxes, you can see gaps clearly. You can see trends clearly. One of the best tools that I've created, and I think I've created a few that are very, very helpful on our spreadsheets, but this takes it to a new level. So we already know the key areas that we're looking at on bounces. You got to get above the 183s, basis this frame, and obviously the 176. on the downside here, support. So this is a box that we're fighting right now. And next is resistance up here and support down here. Cannot stress it enough. Trade for simplicity. Make your life easy. And here's crude oil. Again, simplicity. And you can set this any way you want. This is a 2-year. Set it for 1 if you want. I like the 2-year to show the perspective of prior support and just how deep this pullback is. It takes the guesswork out of it. You don't know that you're going to be right. Nobody knows once it starts it's going to plunge this far, but you know, if you're a technical analyst, you're certainly going to be looking at trend lines and breaks. Neckline. It's a neckline break. Look how once it lost second level at the top, shoots down to the middle, shoots down to the bottom of the pipe, can't get above the middle, comes down and is tackling the next level. Step by step. All right, not a bad IB. All right, anybody that is still playing, wants the gap, got to use this 38 as aggressive support, we said. For our squeeze pivot. That gets taken out. We can still get it, but I'd like to see that hold to give better odds. One tick missing. Bingo. Gap is closed. Now you can go home and go play golf. Too cold here in Connecticut, 32 degrees, but nice trade if you took it. Anybody that has a trailer, up to you. Sidelines is okay. You've got what you wanted if you played for the gap. And obviously with trailers, if you can manage trailers, up to you, but I would not initiate new trades on this breakout. Just manage your trailers, all you can do. Stops up. And for sure, paid by 48s. If you remember when we talked this morning, I said we're going to use this 51 area back here. And I'm suggesting now paid by 48s. There's a nice little stop run. And a reminder that we said we were going to watch this box. 22 support. 46, the resistance of at this box, and then above that, the good fortune. So anybody has a trailer for good fortune, up to you. And just move your stops up. 50 is T2 today. And I'm suggesting paid for sure by 48s. Great trade. Anybody that played long side today on an inside day premise, congrats. We said right here this morning at pre-market, we were going to use this 28 for support, this top of this box, the angel. That's the irony, that most traders would rather jibber jabber out there on Twitter than spend a couple of bucks to get some counsel from traders like me. And I'm not saying I'm the only one. There's a lot of good traders out there that can share and are reasonable in what they charge people for their services. But somebody could have came in today, theoretically the last day of the program, and paid for it in one day. Another set of eyes, several pair of eyes from guys like Zeke and myself with a little experience. But that's human nature. People want something for nothing. Can I say? Great trade. Anybody that's played long side, keep an eye on time. Let's see. I think paid by 48s. I know we may leave some chips on the table, but it's a risk and reward idea right now. And let's use for squeeze pivot, we had said earlier, that 32s. And we said let's use 38. That's our squeeze pivot until broken. And then obviously a new one back up here. It's another one, just under 40. 10-minute chart that we looked at, our best friend. A green line pushed, and I said there were tails down there. It seemed to be this chart was in play and pushing. And then we get the breakout on top of the pivot, and here we go. If you want to manage trailers, up to you. I'm a little more conservative than that. You know, if you get your VIG and then some, you know, I'm not one of those who likes to add in after a breakout. A lot of times the turtles get caught, point or two. But truth be told, you can enter anytime you want into the market and just use your stop, use a 2-point stop. So one theory is, hey, you know, your stop's not it. What are you worried about? Another is risk and reward. You know, you're a couple of points away from a 20-point trade, right? 29 and 20 is gets you to 49. So you've got a couple of points, point and a half remaining for that idea. And so it again comes down to risk and reward. And we'd said earlier today, if we were looking at this range, we were going to look at this 50 area. Key idea. And even up here, if you want to think about yesterday's demon, but I wanted to think a little bit more conservatively. Stops up, all I can say. If you're if you're looking for a home run, just move your stops up. Great trade. Anybody that took the long side today and had a little courage to try to close that gap, fabulous trade. And 48s are hit. Stay humble. Never let your head get so big you got to go get a new hat.